What's going on, motherfuckers? Throwing together a weekly recap, going over this week's price action and expectations for next week. Very, very strong close to the week for the indices and essentially market-wide boom candles all over the place today. A very strong week for crypto, including the altcoins, which is a good sign. And as far as AMC and the frustration that I showed on stream during earnings, I'll touch on AMC and the position we're sitting in right now, what we're looking for, and what we absolutely don't want to see. But judging from today's price action, it looks like we may have deviated from fractal in a downtrend on AMC, which is what we want to see. All it takes is one iteration of fractal in an uptrend to complete, and then from there, macro break into the squeeze. We saw it in the last cycle, and for this cycle, it's going to be the same exact thing. It's going to be the same story for AMC. So I'll get into that, but first, we're going to start with the indices as we always do. Kicking it off with Dow Jones, which did not form a new all-time high this week, but I'm thinking next week, early on in the week, we're going to see some boom candles on Dow Jones. It looks like it's a day or two behind NASDAQ and S&P 500 currently in this current iteration here. And we already know where NASDAQ and SPY went today. Absolute fucking boomsticks. So here's Dow Jones. Monday, Tuesday, Wednesday, pulling back, curling back up Thursday and Friday. Today, closed right back at that GANS level, 39,100. This looks good. Again, looking for more upside next week. Early on in the week, expecting new highs here early next week for Dow Jones. NASDAQ. So again, essentially the same pattern. So you have Monday, Tuesday, Wednesday pulling back. Thursday starts curling up. Friday, today, boomstick. New all-time high on NASDAQ today, right up to this GANS level here at 18,300. Looking for continuation next week. Moving on, S&P 500. What a fucking day. New all-time high today again. High of day, I believe, was 513.29. Essentially the same exact week. So Monday, Tuesday, Wednesday, pulling back. Thursday, Friday, curling up. New all-time highs today. Absolute fucking boomstick. What a day. We love that. Next GANS level we're looking at is 518, and S&P 500, along with everything else in the market, is dangerously close to macro break. So big time upside, talking verticality. As if this uptrend was not vertical enough, what is coming next on S&P 500 is going to be absolutely fucking absurd. So getting into that. Now we have this rising wedge pattern, bearish, but it's not going to break to the downside. Yes, this is technically a bearish pattern. I've spoke about this numerous times already, but this runs back to November 2023 at the 409 bottom and just working our way through the rising wedge here, bouncing off the top as resistance, bottom as support, wick below a few times, reclaimed it, broke back below again, reclaimed it. This was that 493 to 507 gap up that we saw. Hit our head right on the top of the wedge, pulled back, broke below again, reclaimed, and then today, boom sticks up to 513. The support and resistance of this wedge are so tight at this point. It's so coiled up. The apex of this triangle essentially is Friday next week. I mean, Friday, it's right here. So pretty much the point that I'm getting at here is S&P 500 is going to be picking a direction, and it's going to be picking a direction in a big way. So, just going to the tracking now, and this was last week's tracking where we left off. Again, this is, just fractally speaking, where S&P 500 is in its current uptrend iteration. Last week, we left off with this top here at 507. I said early on in the week, we were looking for a pullback to retest the top of the range here at 503, and then continuation here into macro break on S&P 500. So this is where we left off, looking for a pullback to 503, bounce and continuation, and the updated chart, here it is. We didn't get the full pullback to 503, close enough, 504 and change, carved a very nice bottom here, curled back up Thursday and Friday, boom sticks up to 513. We are now in the macro break candle for S&P 500. I'm looking for more upside, big upside on S&P 500. And again, just fractally speaking, we're essentially in macro break for SPY as of today. And back to the pattern that we've been trading in since November 2023, we're looking for a break out of this either to the downside or to the upside. My bet is to the upside, and when it does, it's going to be big upside on S&P 500 verticality. So this looks really good. Moving on from that, Russell 1000, new all-time highs today. Essentially same week, so Monday, Tuesday, Wednesday pulling back, Thursday and Friday curling up into new all-time highs, cracking through the Gans level at 281. Next overhead Gans level is 289.50. This looks good, looking for continued upside here. Essentially the same exact chart as S&P 500, so same shit, looking for upside next week. Moving on to IWM, what a fucking week. Not as explosive as S&P 500, as SPY is, where it's sitting right now, there's no resistance. It's just air overhead, so it's moving a lot more smoothly, a lot easier. But IWM, a very solid week, pushing the top end of this range, 205 plus now. This looks really, really good. This is what we've been waiting for on IWM. Not only breaking out of the accumulation range coming off the spring here, but now breaking the local high at 205. And this was late December, so the rest of December into January, and now we're in March. We finally broke the high here. IWM is about to go vertical. This shit is about to start flying. IWM is my MOS. This is my play. I'm looking for big upside here and fast. So this looks really good. And back to the synchronization in the market, the whole theory here. I've been theorizing that IWM is, in a sense, holding the meme stocks down. And when we see macro break here, we should see the smaller cap tickers and meme stocks start to move. And it looks pretty good for that case still. So for now, the theory is holding. And like I said, looking for big upside here. March's monthly candle, I'm going to get into that on the next chart. But March's monthly candle on IWM, we're seeing 220, 230 easily in March. So I'll just move on from that. But really quickly, just getting into the micro of this now. This is where we left off last week. So again, the upper end of the range here, the local high, 205.55, left off at 199.78 last week and updated now. Not only did we curl back up and form a new 52-week high on IWM, but we also closed above the trading range that we've been in since December. Closing 205 plus here is a very, very big deal. Looking for explosive upside on IWM all this month, as well as S&P 500, as well as NASDAQ, as well as Dow Jones, as well as the rest of the market and crypto and every fucking other thing else, and meme stocks. So this looks really, really good. Looking for big upside here going forward. It would be really nice to see a gap up, just an indistinguishable gap up. This is the break. So that would be like 210, 208 to 210 range on IWM. But March monthly candle, I'm looking for 220, 230 here. Now, really quickly, I do want to talk about one other thing, and this is essentially just showing the market synchronization of everything. I did it in one of my other videos with specific tickers, like the underlyings, blue chips, and when the crypto market and the altcoins and small caps and everything else. But really quickly, I just want to talk about IWM, S&P 500, and NASDAQ. So I have all three on the screen here. These are monthly charts for each one, and we're going to be starting from May 2000 because that is inception of IWM, comparing it to S&P 500 and NASDAQ. So starting in May 2000 for all three charts, again, these are all monthly charts, starting with downside, and starting with downside. You climb your way out, you climb your way out, you climb your way out, taking you to the 08 financial crisis dip. Right here on IWM, on S&P 500, same story, and NASDAQ, same story. Really, you're just looking at a macro spring there, very COVID-like, and we're going to get there in a second. Climbing out of that for all three, climbing out of that for all three into your COVID knife, again, another macro spring. COVID knife on SPY and COVID knife on NASDAQ, and then climbing to all-time highs, the highs of 2021 for each. Roughly November 2021 all-time highs, and then from there January 2022 the whole market breaks down, yada 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 yada. The market synchronization market wide for literally every ticker. essentially every ticker. So the highs of 2021 breaking down in January of 2022, the bottoming formation, of course, S&P 500 is ahead, so completed the bottoming formation, broke all-time highs. NASDAQ completed the bottoming formation, broke all-time highs. IWM completed the bottoming formation and is now about to break out of it and head for all-time highs. So this looks really good. Zooming in a little bit on this, just taking a look, and this is just looking at COVID until present. Again, you're looking at IWM, S&P 500, and NASDAQ monthly charts, COVID to present. So your COVID knife here for each, climbing into 2021, COVID knife climbing into 2021 highs, COVID knife climbing into 2021 highs, and then the bottoming formation, each of them breaking down January 2022 into the bottoming formation, which for each is very symmetrical moves. It's essentially an inverse head and shoulders for S&P 500 and NASDAQ, and then for IWM, it's just a huge accumulation. So for NASDAQ, left shoulder here, head, right shoulder, break out of the range, all-time highs. S&P 500, left shoulder, head, right shoulder, break out of the range. I covered the S&P 500 symmetry chart for a year straight, so this shouldn't really be news to anyone. Very symmetrical bottoming formation on SPY, very symmetrical bottoming formation on NASDAQ, and very symmetrical bottoming formation on IWM now. Left shoulder, head, right shoulders forming, and we're poking out of the range now. 205 plus. This thing is flying. The March monthly candle on IWM, I expect to at least make it up to 220, if not 230, into the top of the trading range here. So March, April, May, June, IWM is going to be shredding to the upside. And that's back to the whole theory with the smaller cap and meme stocks, looking for macro break and squeezes on all of those as well. So IWM is very, very close to taking off here. This looks really good. So that is that. Now, Bitcoin, what a fucking week. Absolute boomstick on the weekly here. 64,000. New 52-week high on Bitcoin. This looks really, really good. I mentioned in my last video, I see all-time highs on Bitcoin sooner rather than later. That also applies to Ethereum. And then the altcoins, the smaller coins like Dogecoin, Shiba Inu, XRP, shit like that, will more than likely be squeezing with the meme stocks like they did in 2021. But Bitcoin looks really good. Absolute boomstick on the weekly to 64K. Just to put it in perspective how close Bitcoin is to all-time highs right now. Currently, this local high and 52-week high of 64,000 here. This is what's left above. A wick, and essentially a wick, and then just some support that broke down here. Once Bitcoin breaks this level at 64, it's new highs. And I'm honestly thinking with the price action I'm expecting next week on the indices, specifically, I mean all of them, Dow Jones, NASDAQ, S&P 500, and IWM, I'm expecting an absolute banger of the week next week for the indices. I'm thinking, because the crypto market has been moving with the market because it's synchronized with the market. I'm thinking Bitcoin is probably going to be consolidating in the 60s this weekend and then break the range to the upside next week and head for all-time highs, and that'll be relatively fast. As of right now, we do have a pennant here. Now, it's not to say this can't break down into some kind of longer accumulation and take the rest of the weekend, but if you see Bitcoin break out, break 64 Saturday, Sunday, it's heading for new highs. This was the spring I was looking for last Friday. I said last Friday over the weekend where I was looking for a spring to 49. Didn't quite get it. I think the low was like 50,500. Didn't get the spring, and then looking for continuation, and then there you go. Just absolute fucking boomsticks to the upside. New 52-week high, 64K. Literally, essentially at all-time highs. I mean, 164 breaks, that's it. Bitcoin will be at new highs, and Ethereum as well. And then obviously the smaller coins, the altcoins will follow. Just like the meme stocks and the smaller cap tickers that aren't really in their bull cycle yet will follow the rest of the market. So that looks good. All right, AMC, I'm going to keep this as simple as I can. What I'm looking for going forward, it's very simple. We don't want to see downside. That should just be obvious. But I'm going to go over the break on earnings and what exactly happened and what I want to see going forward. The macro perspective hasn't changed. Bull cycle, bear cycle, bull cycle, bear cycle. Peak 1, peak 2 is your January, June. Peak 1, peak 2 is your January, June. The pennant breaks down into the downtrend, and then your 3 touches on resistance, 1, 2, 3, 1, 2, 3, and then the final iteration, this huge W, bottom 1, tri-peak, bottom 2, all-time low, uptrend and squeeze, bottom 1, tri-peak, bottom 2, all-time low, uptrend. We want to hold this uptrend. Very simple. Moving on from that, I do want to talk about this wedge I was talking about last week in my last video. I was talking about this resistance that we had currently that we did break out of this week. And this resistance runs all the way back to July, essentially when we were halted on that gap up in July, that 100% move, rejected here. This is essentially our halt line, just a big descending wedge, 7 months. Broke out of it this week, and on earnings, we actually retested it and held, sitting above it right now. So yeah, it was ugly on earnings. Fractally speaking, though, this doesn't look bad at all. I'll get more into that with the side by side and why I was so frustrated on earnings. But here it is. So here is why I was so frustrated on earnings. But it turns out this actually doesn't look too bad. So I mentioned multiple times in the Discord leading up to earnings, we're playing out the exact same iteration that took us to Q3 earnings on AMC. So the spring, and this would essentially be your January 5th, 2021 bottom, the channel up, the pullback chop zone, January 15th V, and then here it breaks to the downside. So again, this would be the all-time low equivalent, January 5th, 2021. The channel up, the first top, come down, the chop zone into January 15th, 2021. Then you look for the V, and then you want to see that break to the upside. And that's when you continue into the squeeze. But this earnings, we broke to the downside. And then we really broke to the downside and then continued all the way to our current spring, leading up to Q4, where, again, this would be your all-time low equivalent, your January 5th, 2021, the channel up, the pullback, the chop zone. January 15th is a little bit higher, and then the V. Now, yes, earnings was ugly. Yes, I was frustrated at the time. As long as we don't break 410, this looks amazing. We need to move up. We need this iteration to continue as a fractal in an uptrend rather than this one, like we saw at Q3, where coming off of earnings, we knifed down and then continued down another 60% to the spring that we had here. Same exact setup, same iteration, same break on earnings, same exact thing. The wick down here that you see here, and then it broke below, and then just continued another 65% down. So we hit the bottom here on 410, retested the bottom of the range here, bounced off of it, and just closed the week sideways there. We do not want to break 410. If 410 breaks, we're looking at new lows for AMC. I'm not even going to try to guess where that's going to be. It's going to be probably in the $2 range if we were to break 410 to the downside. I don't think we're going to. I want to see continued uptrend here. Best case scenario would just be a gap up on Monday, which, with the way the market's looking right now, with the day that SPY had today, the day that IWM had today, closing 205 plus, where crypto is, Bitcoin 5K away from all-time highs and just shredding to the upside. Altcoins look amazing. I really don't think AMC is going to be breaking down here, and we need to not break down here. All we need is one iteration of fractal and an uptrend to complete and break to the upside, and that is the squeeze. And it's the same thing for GameStop as well, which before I even, I could just show it here. So this repeating iteration on GameStop that I mentioned multiple times, and I'll just go all the way through it, and then I'll bring it back to the AMC chart and try to, explain what I mean by this. So you have your W here bringing you into the jet test, your 1-2 peaks. This is the macro resistance on GameStop. Breaks down to support, fractal in a downtrend. It breaks lower. Another W here, jet test up to the top, 1-2 peaks on resistance, comes down to support, chops on support, breaks to the downside again. A whole nother iteration. Another W, jet test, 1-2 peaks, breaks down to support, chops on support, fractal in a downtrend, breaks to the downside again. All the way down, another W, jet test up to the top, 1-2 peaks, down to support. So, and GameStop has been range bound here for essentially a month and a half now. So this is mid-January to present day. GameStop's just been sideways. It needs to pick a direction. So it's either going to break to the downside and play out a whole nother iteration like this that you see after each red box. This whole iteration that you're seeing, it's either going to break to the downside and do one of these again, break to the downside and do that, or this continues a fractal in an uptrend, breaks to the upside, and if it breaks to the upside, it squeezes. And that's bringing it back to AMC, what I was just saying. Fractal in an uptrend, so we want this to break to the upside. If it doesn't break to the upside, we play out a whole nother iteration like this until we get a spring again, and then we get this set up again, and then we would look for a break to the upside. Conversely, if we just break to the upside now, we're squeezing. We just need one iteration to break to the upside. We need a gap up, essentially, is what I'm saying. So, and then this is just looking at it on the daily. Same exact setup. In the spring, your first peak, your second peak is higher. This is January 15th. January 15th, end of day, the V. So your spring, first peak, second peak is higher. January 15th. January 15th, end of day is the V. It breaks on earnings, gaps down. Same exact candle, by the way. Q3 earnings gap down, this candle right here. Q3 earnings, or Q4 earnings gap down, this candle right here. Same candle. We want to hold 410. If we break 410 to the downside, we're getting this. All the way down to whatever price target it's going to be. If we hold 410 and continue uptrending and gap up, we're squeezing. It's really simple. Just need to continue uptrending. Don't want to break any lower than where we are now. And the side by side, it's still, is still completely valid, especially with the 200 EMA, which is getting low. The 200 EMA is ridiculously low on AMC right now. I think it's almost $16 now. But again, this is the flat portion side by side. So the 2021 break to the downside here, chop, gap up, 3 peaks. Third one pokes above the 200 EMA. Over here, breaks to the downside, choppy, gap up, 3 peaks, pokes above the 200 EMA, third peak. W, fake out move, pokes above the 200 again. And then the final iteration, the W, bottom one, and then all-time low. Bottom one, all-time low, the uptrend off all-time low, the uptrend off all-time low. We want this to break to the upside. Preferably a gap up would be the best case scenario. And the range would still be the same. It would still be that $12.50 to like $7 range. Would be scenario 1. Scenario 2 is gap to the 200 EMA, which is now $17-18. And that's what we're looking for first. Once we claim the 200, then we could talk about squeezing. That's it. Really it for the video. The market is in it's the spot the market's in right now is absurd. This is tracking perfectly, and we're in the middle of macro break for SPY. Really just looking for the break out of the rising wedge here, which theoretically that would be the macro break for SPY, breaking out of this pattern. IWM looks amazing. We finally broke and closed above 205. This is going to start flying. The synchronization here, we already know where it's going. We saw it on SPY. We saw it on NASDAQ. We saw it on Dow Jones. We saw it on Russell 1000. The synchronization is perfect. It's literally we know where it's going. IWM is going to new highs. And I'm thinking the March monthly candle is going to be absurd market-wide. So boomstick, March monthly candle, IWM, SPY, NASDAQ, Dow Jones, crypto market. I think March is going to be a very, very big month. And then going along with that, hopefully the meme stocks break to the upside as well. And if they do, they're squeezing, and that would be March. And theoretically, and I'm just going to be honest, in my honest opinion, If we're talking targets for AMC, it's late March and more than likely would be on the FOMC meeting where potentially the Fed cuts rates. I mean, if there was ever going to be a catalyst, in my opinion, that would be it, because if that happens, the market's going to fly to the upside. Again, March monthly candles are about to be absurd. And that's it. The January 2021 squeeze was actually on FOMC meeting. So we have FOMC this month, March 19th and 20th, I believe. If the Fed cuts rates, the market's going stupid. Not that the market's not going stupid now, but if they cut rates, it's just going to be absurd. So if there ever was a catalyst, more than likely that's going to be it. And IWM is my MOS, aside from meme stocks. This shit's about to fly. 220, 230 in March, easily. Not financial advice. Nothing I ever say is financial advice. That's it for the video. Hope you guys have a good weekend, and I'll catch you in the next one.